When we talk about businesses in India going solar, the conversation is usually about two things, being sustainable and saving on energy bills in the long run. But what if I told you there's a powerful, government-backed financial tool that makes a solar investment an immediate strategic advantage? Well, that's what we're going to explore. Let's call it solar's secret financial weapon.
So, if you're running a business, solar has probably crossed your mind. I mean, it makes a lot of sense, right? But that initial price tag, that can feel like a massive hurdle. It's a huge capital expense, and let's be real, in business, every single rupee counts. So you're probably weighing the pros and cons, wondering, is now really the right time for this?
And that really is the heart of the problem, isn't it? The upfront cost. It's the number one barrier. But here's a game-changing question for you. What if you could legally write off a huge piece of that cost? We're talking up to 60% of it from your taxable income in the very first year. Suddenly, the whole calculation changes, doesn't it? Okay, so this financial superpower has a name, accelerated depreciation. Think of it as an incentive designed to make solar an absolutely irresistible choice for businesses. Let's break down exactly what this is and how it's basically a financial fast-forward button for your investment. So simply put, accelerated depreciation, or AD, is a tax benefit. The government creates incentives like this to encourage certain investments, and in this case, it's all about renewable energy. So instead of writing off your solar plant's value slowly, bit by bit over many years, AD lets you take this massive deduction right at the beginning. This immediately lowers your taxable income, which of course means you pay less in taxes. It's a really simple idea, but it has a seriously powerful impact on your bottom line. And here's where you really see the scale of this thing. For most regular machinery, you can typically claim about 15% depreciation. But for a solar plant, that rate jumps to a whopping 40%. That is more than double the standard rate. And that, right there, is where the magic happens. And it gets even better if you're a manufacturer. On top of that huge 40% base rate, you can often claim an additional 20% depreciation in that first year. So you add those two together, and you're looking at a potential 60% of your entire solar investment being deducted from your taxable income in year one. Just incredible. Now, there is one critical catch. It's all about timing. To get that full 40 or 60% rate, your solar plant has to be up and running for more than 180 days within the financial year. If it's operational for 180 days or less, the benefit for that year gets cut in half. So planning your installation timeline is absolutely key to getting the maximum bang for your buck. All right, theory is great, but let's make this real. What do these percentages actually mean for your company's bank accounts? Let's walk through a super simple, real-world example using a nice round number. Okay, let's imagine your company invests 1 crore rupees in a rooftop solar plant. That's your initial investment. It's a big number for sure, but watch how accelerated depreciation starts to work its magic on this figure. With that 40% base depreciation rate, right away, you can deduct 40 lakh rupees from your company's gross taxable income for the year. Just like that, your profit on paper is now 40 lakhs lower, purely for tax purposes. And hey, this isn't just some accounting trick. This deduction has a direct, real-world cash impact. Let's assume a pretty standard corporate tax rate of about 30%. That 40 lakh reduction in taxable income is about to turn into actual money saved. So what's the bottom line? Well, 30% of that 40 lakh deduction is 12 lakh rupees. Think about that for a second. That's 12 lakhs in cold hard cash that stays in your company's bank account instead of going to the tax department. All in the first year. That's like getting an instant 12% return on your investment just from the tax savings alone. That immediate tax saving is fantastic, but the benefits don't stop there, not even close. This initial boost creates a powerful ripple effect that completely changes the financial picture of your solar investment for years to come. Just look at what this does to your payback period, the time it takes to earn back what you spent. Without this benefit, you're usually looking at 5, maybe 6 years. But with accelerated depreciation, that massive year-one savings slashes the payback period all the way down to just 3 to 4 years. You get your money back so much faster. And this is about more than just a quicker payback. It's just smart financial strategy. It improves your cash flow right away. It takes advantage of the time value of money. I mean, a rupee saved today is worth way more than one saved 5 years from now. And it gives you immediate cash, liquidity, that you can plow right back into your core business to fund growth, buy new machines, or hire more people. So by now you're probably thinking, okay, this sounds incredible, but is my business actually eligible? And that is the final and most crucial piece of the puzzle. Let's get crystal clear on who can take advantage of this.
The rule here is pretty straightforward. This benefit is designed for businesses that make a profit. So if you're a commercial or industrial business, a factory, an office, an institution, and you have taxable income that this deduction can be used against, then you're in. The one group this doesn't apply to, unfortunately, is residential users. This is strictly a commercial incentive. So that brings us to the final question. When you can slash your tax bill, cut your payback period by years, and free up cash for immediate reinvestment, well, going solar isn't just an environmental decision anymore, is it? With powerful incentives like accelerated depreciation, it has arguably become one of the smartest, most strategic financial moves your business can make right now.